Good morning, good evening, good afternoon, guys. How is everybody doing? Jumping back into the markets, though, it's not looking good. It's not looking great. We have finally traded back into this 74k area that we've been targeting for a while now on the higher time frame. We did say that our kind of last line in the sand before we broke down to this level was the 80k. We had a little attempt at holding it and then just broke through, but we have bounced nicely. Now we're starting this next weekly candle, which you will see here if you've got a keen eye. We're looking on the weekly chart, and if there was anything to suggest that we were on copium levels already, it's the fact that I'm zoomed out on the weekly chart and I have the Ichimoku cloud up in front of me. Yeah, cope is setting in. Cope is setting in, and it kind of set in towards the end of last week. Now, we're not necessarily coping on Bitcoin. Obviously, we're generally bullish on Bitcoin and we do want to see it go up. We're just talking about the spot bags that we're holding, because obviously Bitcoin nuke, spot bags go to dust, and I would like to exit those at some point. But when it comes to Bitcoin, like we say every single day in the Telegram, whether the market goes up, whether the market goes down, we're going to make some money. Just right now, we'd much prefer if it goes up, because it's much more fun and much more of a enjoyable trading experience when we're in the positive. But now, as we said, we had our line in the sand at 80k for us to come back and test this weekly buy-side imbalance here, which you can see in the dark green box. Obviously, we didn't hold. We have come back and tested it, and this now is really our final version 5, final mix version of us not getting really tragic. We didn't really want to see this price, these levels revisited again, because now it puts us in the danger zone. We're hanging over the edge and the rope is, the rope is very frayed. We have got the levels set, which we'll go down to in the daily chart. I'll pre-warn you though, there's a lot of levels. But again, if you've been following these videos, you know these levels are not put there arbitrarily. They're put there because these are the highest probability plays. And it's going to be especially important in this environment that we're in with Bitcoin, because you're going to want to be trading between the levels. This is not a holders market now, as it hasn't been since up here, back in October. As I've been telling you, this is a traders market. We want to be in and out and looking at what the market can give us every day. And right now it looks like there's lots of opportunities, whether it's to the upside or whether it's to the downside. And the more opportunities there are, the better for us. But of course, it kind of makes our charts a little bit messy. Hence why I'm out on the weekly and I'm looking at this Ichimoku cloud now. People who are new thinking, what is this indicator? And I'm not an indicator maxer, but for really high time frame stuff, I do like to look at this, because although no indicator will be a crystal ball and give you a great vision into the future, there are a lot of quite good traders that I know that use this. And again, as is with all of these things, they become self-fulfilling prophecies if lots of people are using them. And if we take a look here at the weekly, we've bounced off this lower band, and I'll try and do a little bit of this. I know a lot of people will not be familiar with this indicator, but look where we've bounced off here. We've bounced off the lower band of the cloud, and now on the weekly, which is obviously this week, we've started to just put in a bullish impulse back off this test. Now, why is this important? Well, one, we've seen the bounce. We need to bounce in this dark green zone here. This is our line in the sand before lower. Now, this was I know we said 80k was the line in the sand, but that was the line in the sand before. We now are in the danger zone. Right now, we're really in the danger zone. 80k was line in the sand where we can have a buffer. Now this is the line in the sand where we're in danger mode, and we could see really big capitulation, because the issue here is not the levels. We know the levels, we know where we'll trade to. It's the mental environment, because if we go back here to these lows, then in the 14th of April, look where we've just sweeped here. We've still got this copium in the market of, okay, well, we've come back and we've double bottomed here on the really high time frame. There's a chance for recovery. So what we don't want to see is the break of this, and it actually aligns nicely with the bottom of our cloud where we found a bounce, and it's given us some confidence that, okay, there's some hope here. We've bounced off the cloud, we've bounced off a double bottom, we've bounced from filling in our weekly buy-side imbalance, copium. Now, one thing that doesn't look great though is the EMAs. So if we look, I'll pull them on one by one, they're all the same color. Let's just disable the cloud for a second so we can see it a bit better. 9, we're under it. 20, under it. 50, under it. The only one we've got left to come and retest is the 200. Now again, I'm using sort of NPC indicators here. but I do like them on the higher time frame. So we've got that around there about 69. What is 69? 69 is also kind of the meme level, right? You might think that's not important, but if you know, you know. But the problem with this, however, is the market structure perspective, because if we start doing this, bouncing here, dun, 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 and we do come back, let's say we just put a little impulse in, we do come back to test this level, we've actually broken the market structure. Now, again, you can make the argument that we've not here, but we're then really just putting ourselves in for more of this. And we're adding confluence to the fact that we'll start to come back and retest these 50 levels, which is horrible to think about. Look, we have to be prepared for any and all outcome. And again, we'll make money Bitcoin trading, but let's not lie, we all have some crappy spot bags that we want to get rid of. And we're not going to get rid of them at a good price with Bitcoin at 50K. But that is something that you want to be mindful of, is that we do have the 200 EMA here. And we want to see this bounce, not just bounce, but then come back and retest the top of this zone here. And again, this is the weekly chart, right? So it's not actually going to play out like that. That's going to be on the lower time frame. But you get the idea, guys. This is really, when I say final line in the sand, I guess you can argue that, yeah, look, the 200 EMA is the final line in the sand. But for me there, we've broken the market structure. And all we're doing then is inviting a retest back into this zone and then going lower, and none of us want that. And if we take a look here at the VWAP, let's remove our top line. This is our EMA line at the top for the 200. And this is the lower is 2024's VWAP. There's a couple of things there that make me concerned that we might be in there, and that if we do trade back into those levels, this is what I'd be looking at to hold. This would be the important level for me. But again, time will tell. It's just important that we get this overall picture in our minds. And I know I've spent a lot more time here on the higher time frame because we need to just bring some sense into it. Because for me, on the lower time frames, which we'll jump into, and on the order flow for specific intraday trades, it's again quite simple. But I want us to all think of the bigger picture and get the narrative going in our heads and understanding where we're at. The last thing I'll say about the cloud though is look at this. Long and short is we don't want the blue to cross over the red. Every time blue crosses over red, we dump. Okay, again, not a big one for arbitrary indicators like this, especially massively lagging indicators when I use order flow, but something to be mindful of. And we have actually started crossing on the daily, but we are reclaiming on the lower time frames on the hourly, but just something to be mindful of. I'm not going to spend too much time going into this. In terms of what looks good in the market, hype. That's pretty much the only thing that looks good. I'll probably do some charting on that later on. I'll just keep this video for Bitcoin now because I can imagine this is going to be quite long. So we've gone through the negatives, but what are some of the positives, Nigel? Come on, Nigel, throw some positives our way. What can we think about? Well, the first one is it's over, right? Like, it's really over now. People have, we're at our, like we said, it's our final line in the sand, but for a lot of people, we've already crossed that. A lot of people, the sentiment, I can't remember being this bad on Twitter. So is this the turnaround to catch the bottom sellers? What's always been typically a good EV trade is just counter trading Twitter. So is this the gigabrain play? Well, we'll see, but that is at least something bullish. And the other thing is Saylor is still buying. Is he just coat bidding? Who knows? Are people trying to aggressively squeeze him out? Probably. But ultimately, he is the Bitcoin mascot and he is driving a lot of the bullish sentiment from the institutional side. So to see that he is in buy the dip mode still is quite reassuring. Another thing is the looming Iran peace deal. The UAE now is pushing a nuclear deal with the US, trying to get them to agree. Might suggest that we're going into more of a risk on environment if this happens. Now, I'm not going to sit here and LARP as a macro politics expert, far from it, but this seems a fairly obvious thing that we should be looking at and something that would have a positive effect on the market. You could safely assume, if you actually look at Polymarket as well, there's a 55% chance that they disarm this year again. Take that as you will. But if we could see some bullish news this week, maybe today, maybe Wednesday, which are typically the bullish days within the week, it might be that nice boost that we need to get ourselves out of the trenches here. Speaking of which, it is the turnaround Tuesday. We actually had a sell-off in the main markets, the S&P, Thursday, Friday. We've started to put in a bullish week on Monday. Let's see. Typically, again, Tuesdays and Wednesdays are bullish for Bitcoin. So Ideally, we can put in some impulsive moves here and regain some momentum. But again, time will tell, and we'll look more in detail on that on the order flow charts on the lower time frames. And finally, always remember the sell in May and go away. Now that has been a very effective tactic in all markets, crypto included. So think about that. Are we now setting up the macro for a rotation into Bitcoin, and then we finally do get the exit pump we're waiting for going into the summer? Something to be mindful of. Is it also complete hopium and copium? Also very possible. But it really does feel like bottom selling here if you're trying to exit your positions, and I feel like now more than ever, if you're already in this with your alts and, you're here, for me, I feel like the risk reward now for most alts is just a cope hold. Because bottom selling here feels bad. Okay, so there's the high time frame analysis, thoughts on some of the macro, thoughts on some of the politics, thoughts on some of the drivers that may help us make a recovery. But let's jump into our intraday trading, and we're going to go down to the daily chart. Now, prepare jump scare for all the lines. I know, it's a very busy chart. We're going to zoom in, but we're going to start out zoomed out here where it looks like a mess. Of course, we've got our lower levels down here if we look to retest. If I start to zoom in, it starts to look a little bit less messy. But as you know, if you've been following the channel and you're following in the free Telegram, like I've said, these levels aren't arbitrary and that they are very fruitful when it comes to our intraday trading. Also, I'm not going to spend too much time here. I just want you to make note of the levels. I'm going to talk here with the bottom so you can make a note of these here if we do continue to break down. This is the zone we're at now, 74.5. We're looking then if we break down, there is a low volume node at 71.555 that we might want to fill in. If we do break below that, expect a retest of 67.571. And again, if we do continue to break down here, the key levels we're looking at for right now on our daily buy side imbalances, going all the way back to October 2024. If we go to the upside here, and I'm zoomed in, here's the levels to the upside. Some really interesting ones in this daily sell side imbalance here, around 80K. Definitely be looking at those to get filled, and I'm expecting a lot of resistance here. But now you can see the levels here. Let's just let's keep it zoomed in. Again, I know the chart is harder to see here, but I just want you to make a note of these levels. Don't worry about the price action, make a note of these levels. Ignore the pink price, that's the current price that Bitcoin is at. And you can take notes of the levels in black here. Mark them on your chart. Again, just a reminder, this is on the daily. And again, for those that are new and don't know yet, these are going to be your potential longs, potential close shorts. So what do I mean by that? I mean, if you're short, let's say here, you might want to start de-risking here or look at taking some profit. If you're short here, you might want to look to de-risk and take some profit around here. Likewise, let's say we're long from here, you might want to look to start taking some profit at here. Simple, right? Simple. So you can either take profit on your longs or look to open shorts from those levels, or vice versa. If you're a bit confused, that's also okay. Just make sure you join the free Telegram. This is where everyone's learning all day. First line in the description. So again, I'll leave this a few more seconds. You can of course pause the video. I'll zoom out again to give you the bigger picture, but you can see the levels here on your right. So pause it, take note of them, and then carry on with the video. And we'll jump now into the lower time frames for some order flow analysis. So we're on the 3-minute chart here, and as you can see, we're kind of ranging at these lows here, it really looks like we're trying to put in a bottom here since yesterday, although we did trade lower into that 74.7 level, which has set our weekly low now. Again, based on the narrative, as much as we don't want to say it, our reversion trades still are going to be the highest probability based on the price action. So I think any big pumps are for fading and for looking for reversion plays more so than trying to wait for up only mode. Because if we zoom out here and we just kind of get a a reality check, which sometimes is very key to get on the lower time frames. I mean, just look at us here, it pumps, and like, as much as I don't want it, that kind of makes sense, right? If I zoom in again here, and I'm gonna actually take these markers off on the left, and I'm gonna take the VWAP off so we can see something that does concern me a tad bit though, is the cumulative volume delta. So if I put the CVD on the chart, you can see here since 11, so again, depends on your time zone, but it would be 2 hours ago from now. Look at this big spike in the CVD. Now this is showing us the difference between aggressive buyers and aggressive sellers. And it's showing us that people are getting aggressive into this market, trying to buy, but price is not really following this. It's suggesting to us and kind of showing to us that there's a divergence between the aggressive buyers and the price action, which is very bearish. If we look here and we compare with the open interest, this here was shorts letting off, so we did get a bit of a pump. This was not necessarily driven by more longs entering the market. This was driven primarily by these shorts exiting. Immediately, the longs start to unwind again as the open interest drops. The key part here, though, for me is looking at this, especially going into the New York Open. So this is 12, so this is almost exactly an hour ago. We've seen this big spike in the CVD. Price is pumping a little bit, but it's not respecting the CVD as much as you would expect, right? So what is it telling us? This is telling us that there's a good chance that around these levels here, there's people looking for limit orders. There is some absorption of these aggressive buyers. So we need to be mindful of this, especially if we see a pump going into the New York Open. As is usual, whatever we see going into the New York Open typically reverts. So if we do see massive pumps into this, be watching the order flow carefully and seeing, if these buyers are getting rewarded, at what levels they might start to not be rewarded. And if we can see on things like the footprint, if we can see on things like the open interest, if we can see on things like the CVD, that would suggest to us that this aggressive buying is going to continue to get absorbed and that we might be looking for further action to the downside. So I'm just going to bring the levels up again here. So we've got some idea and some context. Right now, watching going into the New York Open, can we break the VWAP that's currently been set for the day? Currently, we are kind of bashing our head off it. If we do continue up, of course, we've got the daily point of control, which would match with these highs. And then again, we've got lots of levels here, our monthly value area high, our weekly high. And again, I'll be looking for these to get tested and for buyers or sellers to either get rewarded or to the contrary at these levels and trade accordingly. To put that in simple terms again, are we trading into these levels? Are buyers getting rewarded? No, probably revert. Are buyers getting rewarded? Yes, okay, we go to the next level, daily high. Are they getting rewarded? No, okay, start to enter shorts. Do we go to the weekly high? Rinse and repeat. We keep it simple, guys. Play the highest probability plays. And I think pumps into reversions here look good. And so that's everything for today. I'm actually also going to be setting up a group chat today. We've already got some members in there that have been for a while, where we've obviously got the Telegram channel where we do announcements, but we're also going to open up the group now as well for chats, obviously live chats, and kind of locking in as and when we're trading and answering questions on the fly. We also have some little meme coin plays in there, bits of banter, having a laugh, and ultimately it's just our community for when we're trading. So it's going to be all the first line in the description for the Telegram. Join that, and if you want more of these daily updates, you want to get it as soon as it drops, like the video, subscribe to the channel. If there's something you want to see me cover, a coin, some particular technical analysis you want me to go through, an indicator, drop me a comment, let me know. And yeah, not much left to say other than good luck, have fun, and I'll see you in the books.